The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out with the German DAX, as we should today, because you can see it's been on a meteoric rise these last couple of days after making that double bottom that we had down there when the U.S. stock markets were getting trashed on Thursday and Friday. Now, it's very important here because we have a political thing that Jason alerted us to, and that is that Angela Merkel is stepping down as the head of her party. She's going to continue to be chancellor, but I don't know what that's going to mean, but we'll let the markets decide. Right now, we're having this huge short covering rally in the German DAX. If we take a look at the FTSE, we're also, you're right, David. David White is talking about bulls get bears, bulls make money and bears make money and pigs always get slaughtered. I have a funny story. Fact is, let's get to the FTSE. You'll see we're almost at the 78% level in the FTSE. It's a little bit weaker, of course, than the German DAX. But since we're talking about bulls and bears, and the next segment that I wanted to talk about was, the history of gold a little bit here, because let's just get this up here and take a look at it. When I was at Drexel, we had on the ground floor there at the corner of Rodeo and Bedford Drive was the Milken building. The first floor was the retail business. That was the commodity department, which consisted of 3 people, and then there were 29 brokers, stock brokers, and bond brokers in there. Some of them had been with Drexel from the very beginning. But there was one guy, Gene Friedman, who was such a nice guy, and he had a lot of what do you call, famous clients. Not so much actors and stuff, but political clients and stuff like that. But at one of the meetings that they had a meeting every Monday at Drexel to figure out what they wanted to get rid of. And Gene was saying that one of his customers came in complaining. He says, if I go long, I lose money. And if I go short, I lose money. And if I don't trade, I miss a great opportunity. And there's probably a lot of truth to that. Folks, let me get this chart up here to take a look at it for you, because this is going to be a little bit of history of my time in the business. If you look at that time down there on the far left, when gold was trading at $110 an ounce, that's when I started at Drexel Burnham. I believe it was August of '76. I stayed with them until, it was February of '82, and then I went on to the Chicago Mercantile Exchange because I knew that the S&P was going to be traded, and I wanted to see what that was going to be like, and how the reason why I went to the floor is to make sure that the trading that went there was very fair. In other words, they didn't flash stops and they didn't try to cheat you and stuff like that. And it was a very fair environment. I saw very little hanky-panking going on during the time, I was at Drexel Burnham. But look at that chart, folks. From 1976 to January of 1980, the gold went from $110 a share to $860 a share. Well, I'm basically long gold and silver during that time. It's pretty hard to do anything wrong. You notice that there were hardly any down months. There was maybe 1 or 2 during that whole time period, and that's really what I did. I mean, I was learning about trading, of course, as I was going through all this, but frankly, I just got really lucky. And I appreciate that. I've always appreciated it, and I just got super lucky. Now, the reason why I bring this up is I had a phone call from one of those Drexel Burnham brokers on Friday afternoon, and he wanted to take his grandson to the baseball game between the Dodgers and the Red Sox, and he didn't have any tickets, and he wondered if I could help him because he knew that I had some old Dodger clients and stuff. And I told him, I said, I haven't really kept, I didn't want to give away the vault or anything, but I told him, I said, there's a real easy way to get tickets. I said, I've never had anybody not get into a World Series game if they did this following thing. I don't know if it works this way, but remember, there's about 10 million people in that LA basin. Dodger Stadium holds 55,000. On the left field side of Dodger Stadium is private parking for the season ticket holders. And many of these season ticket holders, because it's Los Angeles, they're company tickets. In other words, they buy anywhere from 4 to 10 tickets for their employees. And at the World Series, even though it's a great thing, a lot of people have other things to do. They don't like baseball, and they do other things. And they come to the game, and they have extra tickets. If you just stand there and ask for a ticket, you can easily buy it at either face value or even less than face value. Well, guess what happened? He got in with his grandson to the game for free. The people that came in had 4 tickets. They gave he and his grandson 2. They watched the whole game for free. He paid for the beer, and but the game was absolutely unbelievable. 7 hours and 22 minutes, and I watched the whole thing. And the reason why is there was a lot of memories going on because of all the years watching those games when I was at Dodger Stadium. It was really, really excitement. Now that doesn't work. That doesn't work for basketball games at Los Angeles because when they had the down at the Hollywood Park, gosh, I can't even remember the name of the place where the Dodgers played or where the Lakers played. The Lakers only had 12,000. People, 12,000 seats, and to get football tickets is really simple because you got 50 to 80,000. You can always get football tickets, but the baseball was pretty easy. I went to see Koufax and Drysdale and Warren Marshall and all that stuff, and Reggie Jackson. I mean, I saw all that stuff without paying any money for it. Anyway, with 55,000 people in the stands, there's some people that just don't go. Now, that game lasted 7 hours and 22 minutes, and you realize that there were still 50,000 people there 7 hours and 22 minutes after it started. Partly is the fact that they're really diehard baseball fans, but also the price of the tickets are pretty high. So it was really great. Now, I was thinking, why can't we get along as a country like they do at the baseball game? Sure, one team like the Red Sox, the other team like the Dodgers, but shut the front door and raise their rent. They made it through. They all got home. I mean, why can't we operate our politics like that? I just don't understand. There's got to be a middle of a road here somewhere, but it's certainly sad. And most of you folks know that I've got students all over the world, and I talk to a lot of people from London and other places across the pond, and they ask me, what's wrong over here? And I said, well, I don't know. It's probably not much different than any other countries, but who knows? Hong Kong had this problem a few years back where they had these little bad apples, these young kids that were really doing some really weird things, blocking freeways and stuff like that. But the old Chinese government came in and said, nah, not on my watch, and they put a quick stop to that. Well, we don't have that type of a organization here, of a government, so we can't quite do that. Anyway, we'll be able to see. Okay, 877-927-6648. We'll be right back. We're going to talk about the U.S. dollar and the stock market.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, before we get to the U.S. dollar index and the euro, I was asked by someone to post a chart of Deutsche Bank. And as you can see here, we broke substantially below $10 a share right now, and our original target on this is right around $9, so it's got about another 8 or 9% to go to the downside. But if we get much below $8, it's going to go to the way of Sears and I believe JCPenney. However, because it's a Deutsche Bank, it's the leading bank of Germany, I don't believe they're going to allow that to happen. But we saw the same thing happen with Lehman Brothers back in 2008, so a lot of it'll all be political. But anyway, the key to takeaway on this is when you see something that looks too good to be true, be very, very skeptical. Look at back in January of 2017 when Deutsche Bank came out, when the stock was trading at $20 a share, and they offered the stock to everyone at a 35% discount. Gee, what a nice thing. Now look at it now. That discount, which would have got you in at 17, you can see has been dissipated all during 2018. This stock still does not look good. It's got lots of problems, as Jason pointed out in the previous show, and it does look like it's trending lower. Let's look here at the euro. This is my 2 cents worth, folks. Here, let's do the dollar index first because I've got it ready to go. Here's the dollar index. You'll notice here that we are up near a double top up here at this 96 and change level. If we get above that, we're looking at 101 or something like that. But we're at a really critical level here in the dollar index at this 96 and change level. If we take a look at the euro, you're going to see something even more dramatic, I believe, because you'll see we're trading around 113 and change right now in the euro. But if we get below that 112, 113 level, That's going to break out the lows from early August, and that would be a really bad sign, folks, because the rally that we had back up to the 118.10 level was an exact 382 retracement of that move. So what I do during times like this, I try to look at the markets from a microscopic point of view. I don't know if you do anything like that, but let me just show you what I'm looking at. Here's the US dollar index on a daily chart going back since the low in July. Now, basically what you're looking at here is a 5-month run. See, 1, 2, 3, 4, 4.5-month run of the dollar index. You notice it has a lot of resistance up at the 96, 90 level, roughly 97. But if you'll notice those red swings that you see there, they're all equal. So though the market goes up, comes down equal, goes up equal. So we've been basically in this really tight trading range here in the dollar index for the past 3.5 months. Now, in order for this to change, we've got to get it above 97, and probably very quickly. If you notice what's happened over the last 3 weeks, since October the 8th, you know, you come down and you just made an ABCD butterfly up. You didn't even take out the high of August of, you know, an August 13th high. So that's not acting that bullish when you look at it this way. We're seeing the same thing when we're looking at the euro on the downside. The euro has held at 113 and change. It's rallied up to 114.40. Now these are 100 pip moves. That's only $1,000, but it's trying to. There's a big fight going on in the currencies to see what's going on. That's why I try to, you know, remind you that you need to follow the money to see where some of this stuff is going. Now we're not seeing any type of a panic move in the stock market at all, boys and girls. We're really not. There are several things that tell us that. One is that let's just take a look here. This is from our good friend Bert Doman at the Wellington Letter. You'll notice here, these just showing the volume and how these corrections have been going on during 2018. We've had these corrections before, and we're seeing the same thing again. No one is panicking in this. If you'll notice, I know a lot of you folks don't follow the volatility index, but it's a pretty good indicator of fear and stuff like that. And if we look at the volatility index, you're going to see that there's no panic in here. Look what happened in January when the market went all straight down between January and February. We had a VIX got all the way up to 50. It was the largest one-day move it had ever had. We're not seeing anything like that now. We might later, and I think we will as we go through some of these cycles, but nothing like that is really is going to happen. That's the main thing of what to see. By the way, they're still chatting about the baseball game in the World Series. The best part of last night's game was the fact that they had Magic Johnson and Larry Bird on about the Boston-Los Angeles rivalry. And oh my gosh, ever since I lived in Los Angeles, all I ever heard was Boston and LA, whether it was Bill Russell, Jerry West, it didn't make any difference. But anyway, moving on to these markets here. The Asian markets are still under a little bit of pressure. If we're over a low because of all the targets we're looking at, and if we follow the money of what is going on in these markets, and we take a look at the banking index, you'll see this is the one that I'm watching most closely, and the reason why these banks move the money. You'll notice here that we've completed a big ABCD pattern down here at this 93 and change level. We've been here for 5 days, folks, so if we can stay above 94 in this banking index, we've got a chance for a nice little bounce here. And I believe this bounce is going to be the important one, because we're finishing wave 1 here. Wave 2 will be a counter trend rally. I don't know how it'll end, but the patterns will give us a pretty good clue. And then we're going to have wave 3, which is going to be a real nasty one to the downside. Then another rally up, and then wave 5, which will probably be sometime in early 2019, was most probably going to be a really tough one to the downside. Now, we've had a question here this morning about Bitcoin. This is really an amazing, we talk about bubbles and stuff like this. This is not acting like a bubble, folks. We're trading around 6,400 in Bitcoin. you'll see since this middle of August, we've had a range from about 7,500 down to 5,900 or 6,000. We've been here the same time. This is not how bubbles end. If this bubble would have ended back in January, this thing would be trading at about $20 a share. And I don't know much about, well, that's the understatement of the year. These cryptocurrencies are a mystery to me, but I do follow the charts because they trade nicely. We're still looking for a price objective at around $3,800 a share in Bitcoin. Remember, it started, we're roughly at around $10 a share and ran up to almost 20,000, and now we're looking at something around, let's say, roughly $4,000. Well, that's not a bubble-type market, in my opinion, so we'll watch that. We have a special guest on Wednesday. Paula Douglas, Mark's wife, will be our guest. She's continued to carry Mark's ideas and torch, so she does a great job. She is a really nice lady, and she actually married Sarah and I because she's also a preacher. 877-927-6648. Oh.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to talk a little bit about the bonds and the notes. Let me just bring this up here to let you take a look at it. This is the chart of the high-yielding junk bonds. That's the HYG. You'll notice that the Treasury bonds on the bottom sign there are, that's the 30-year Treasury bond. You'll notice the little ABCD pattern that we have going on there in the 30-year bond. That's the one that came in at just under, at least I believe it came in on Sunday night at around the 139.28 level. We were looking for around 140. We haven't quite got there yet, but that could be completing that small little ABCD pattern. The long-term bonds still look very, very bearish. You know, we are going to go lower, but that's neither here nor there. Now, one of the questions that someone asked me over the weekend about the market and the Treasury bond market and stuff like that was, you know, how the Federal Reserve, you know, operates like this. Folks, let me just share with you something that we get from one of our friends from the Elliott Wave theorist. I'm not an Elliott Wave person, but I do follow their research quite a bit because it's quite good. If we look at this period between 2000 and 2007, you'll notice that the Federal Reserve follows the market. I mean, this is what interest rates are really doing, and the Fed actually follows the market. They almost never act anticipatory. They do during times of crisis and things like that, but they don't. If we were to look at this, let's just bring it out on a little longer time frame. It's going back to the year, back to 20 years, well, 18 years ago. You'll take a look here that the same thing was occurring. That the Fed is actually anticipating what's going on. We got a caller from, let's get a caller from Toronto. Mike, are you there? What can we do with you, my friend?
Good morning there, Larry. Thanks for taking my call.
Yes.
I was observing the price action in GDX, and I noticed that there's this saucer-shaped formation, which led me to believe that possibly, just possibly, we could have a cup and handle formation forming on the GDX. And I'm just wondering, what's your opinion?
Well, I'm not a cup and handle person, even though Bill O'Neill was a good friend of the family. In fact, my daughter dated his son, but I don't do those patterns. But the gold chart looks extremely bearish to me, my friend. If you'll just take a quick look at it here, we'll just look at it here on the weekly basis, and you'll be able to see here that all we've been able to do over these past 3 months, going back to July when we made our first bottom, was make a 382 retracement up here at the $13.46 per ounce. Now, if we get above $13.50 per ounce, it might go a little bit. It could go some higher. But when you look at the combination, Mike, of silver and gold and platinum, boy, it's hard to make a bullish case for it. It really is. When you look at the weekly charts and stuff like that, this rally that we've had since July should be very disappointing to the bulls. In fact, I was a bull.
Dead cat bounce.
Yeah, well, not saying any dead cats, but yeah, that's what it looks like to me. It certainly does.
There's a rumor going around that J.P. Morgan's hoarding silver.
Oh, that rumor's been going on since Hector was a pup, and that dog's 18 years old now. So that's all baloney. If they're doing anything like that, they're not letting Mike and Larry know anything about it. So that's just fake news, as they say in the trade.
Oh, it's fake news.
Yeah, well, if they were hoarding, let's just take a look at the silver chart here. If you think that they're hoarding silver, they've certainly done a great job because it's been coming down from $18 an ounce down to $14 an ounce. And in fact, we went below it for just a short period of time. So they're not doing a very good job of hoarding it. So that's just rumor stuff. Don't pay attention to that, Mike. Follow the charts. If they're buying, it's going up. If they're selling, it's going down. That's the bottom line.
Okay.
Does that help?
Then. I'll keep my powder dry. Thank you very much.
Are you getting any snow up there in Toronto?
It's coming soon, yeah.
Yeah, well, good luck. You'll have those 2 days of summer, July 5th and 6th, so be patient. All right. Thanks a lot, Mike. We appreciate it. Okay, folks, let's move on here. There's one commodity that is not commodity, but one foreign exchange cross rate that is at really a incredible level here. Let's get this up here. And since we were just talking about to Mike in Toronto, this is the Canadian dollar. You notice that we have this 135 pattern in here. That ended at 131.50. As long as we don't get above that 131.50 level, we've got a pretty good chance here to see if the market is going to, have one of these big moves that you sometimes, like to see. So we'll just pay sort of close attention to that and see if it's going. Now, the stock market, we've had a pretty good rally. We rallied up to the 78% retracement of the range yesterday. That came in at 26.98 in the S&P, in the E-mini S&P. There's a little resistance up there at the 2,700. The $64 question here, folks, is whether we're going to make it the target of all these other indices that we're looking at. We hit the target on the banking index, but we've not hit it on the index for the S&P or the Dow Jones or the Russell. Still has a little bit more to go to the downside, but we are in an area where it is very, very close that we get a little bit of a bounce here. We've been coming down hard for 5 weeks, and the market is still extremely oversold. So we want to keep a close eye on this, because we're going to get a chance here sometime in the next 4 to 5 weeks to put on a really good position for the next leg down, which will be, probably right after the, that would be probably around Thanksgiving would be my guess. So the key levels to look at today are 2,700 in the E-mini S&P. If we can clear that, then we got much more to go to the upside. And then on the downside, you'll notice this comes from one of our friends from across the pond, who's one of the smartest dudes that I know, does a lot of work on sacred geometry, and I'll bring this up here to let you take a look at it. You'll see here that the price target for the S&P came in at 26.30. Well, we hit 26.28. Last Thursday. We're trading at almost 2,700 right now. So as long as we hold that, we're fine. If not, we'll get to our original target, which is 25.70. Now, the way I arrive at those targets are by, using the A, B, C, D patterns. That's what I try to look at. You'll notice here, I'll put this up so you can see it here. There we go. Here, there you go. You'll see that's what we hit the other day. We're trading right around that 2,700 now, but we still got a chance at that 2,600 or 2,592 target. That's the ABCD. I follow the ABCDs exclusively, folks. They'll get you to the promised land. They really will. They do a great job, and that's neither here nor there. So we'll see that. When we get back from this next break, I want to talk to you about a little bit about this electric automobile business, which I know zero about, but we'll watch it very, very closely. And then also want to talk a little bit about, what happened on October the 19th of 1987, because you don't ever want to go through that. That's not fun. And I was on the right side of the market, and it was still not fun. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking about the stock market crash that happened 30 years ago. And it was pretty nasty that day on October the 19th. It actually was the best buying opportunity of that decade. The low had been made in August the 9th of 1982. The stock market bottomed, I believe somewhere around 700, as I recall. I'm doing this from memory this morning, but then we rallied up to 2,700 into 1987. 5 years later, and then on that fateful day we came down and we stopped exactly at the 61% retracement of that move. We did it in the Dow Jones and we did it in the S&P 500. Back in those days, they were not trading an E-mini S&P. They were trading a large size contract, which is 10 times the value of the one we have now. So if you're trading a 1 lot now, you would have been trading a 10 lot then. So that's the big difference. Anyway, that was a great buying opportunity. And from there, we went up to 27,000, I guess. So it's been one heck of a run. But that's pay attention, because those outlier events, folks, don't do your trading career on stuff like that. You like to, as a newsletter writer, you always like to try to get as close to bottoms and tops as you can for your subscribers. But even then, you're going to do just the best you can. No one knows what's going to happen next. And by the way, Steve Rhodes does a great job at that, because he's the timer of the year, folks. We're lucky here at TFNN. I think Steve is the timer for gold and also the timer for the stock market. And I believe he's in the top 2 or 3 in bonds. So lots of kudos go to him, because he's done a great job doing that. Okay, someone's asked a question about the bond market. Folks, the bond market is just flat out bearish. I mean, it really is. It just doesn't, have any of the characteristics that you'd like to see as far as, a bounce of any kind. Let's just look here. This is the picture of the daily Treasury bond, and you can see here what we've done here as of Friday. We made a 382 retracement there at that 139.28. The 382 came in at 139.25. We're now trading at 139.09. And so if that's all you get, for a 1 month rally is a 382 retracement, you can see how negative that looks to the Treasury bonds. That means higher interest rates are coming at lower Treasury bonds. Should the bonds break badly either today or tomorrow or early this week and we get down below that 137 level, folks, that sets up that long-term price objective that we've been watching that comes in around 127. So, you know, these things could really start to accelerate. And given the fact that where the stocks are, you know, we've had a pretty big break of around 10% in the stock market. We could easily see, you know, more to the downside because we haven't had much of a correction in stocks as of yet. It's just been a normal correction. Granted, we've had some, you know, wild swinging days, but, you know, the wild swinging days, that's just normal. There's nothing to do about that. Folks, I want you to see something else here. This is, I think, relatively important because I always talk about that follow the money comes out of that Jerry Maguire movie. But anyway, no, that's out of Bernstein and Woodward, sorry. The other one was Show Me the Money. You'll notice here, since August, you'll notice the big divergence that's occurring between the euro and the gold. And that is very unusual because this has a correlation of about 95%. And during that time, during August and September, that correlation was non-existent. And now we're finishing the ABCD pattern in the gold market, and that is telling us that we should be extremely careful for several reasons. Take a look at the XAU, the gold-silver index here, folks. We had an ABCD pattern form, and you'll notice that big down day that, one second. The big down day we had on Thursday when the Dow was up 500 points. From the very beginning of that day, they were hammering the gold and silver stocks. They were down sharply that day where the Dow had rallied, you know, 500 points. We had a little bit of a bounce on Friday, and now we're down near those lows again. This is usually not attributed to very good price action, folks. So gold, silver, all of these are beginning to look like they might be getting a little tired up in here. And on the long-term basis, of course, they've been in a downtrend since August of 2011. So this is an interesting one that we need to be looking at. Let's just double check here quickly in the last 3 minutes to see if we can see what we've got here. The stocks are really doing very little. Gold's down a tiny bit. The bonds are down a little bit. The bonds should start to sell off because we had a 5-day rally in there into that top up there at 139.28. So if you got a rally in that, say up to that 139.16, that's only, you know, half a point. You could easily, that would be a really good spot to maybe take a nibble on the short side of the Treasury bonds because that's a market that is certainly in a very, very strong downtrend and has been for well over 2.5 years. I don't have enough time to cover the grains, but I did quite a bit of that over the weekend in the 24/7 newsletter. I think we've hit some really good support down here in the grains, especially in the wheat. We hit that 490 level, went to 488, which was a 1.27 expansion, and then rallied 23 cents. And most of that was short covering. Right now we're trading around 505. So it's some of these grains are looking like they are, you know, getting ready to hold support down in here, and that's a key thing to be watching. One other thing that we talked about is the relationships of gold to these other currencies. We get this chart from our good friend Steve Rhodes, and you'll notice that the rally that we had in gold, you know, versus the U.S. dollar was right at a 50% retracement. In euros, it came in at the 61.8% retracement. In the yen, it came in at the 61.8% retracement. And in the pound, because the pound was so very, very weak, it got up to the 78% level. Now, the pound is really trying to find a bottom, folks, at this level of 128. Anything below 127.50 in that British pound is going to look extremely bearish. That's no other way to look at it. I mean, it's just really it's just really hard to fathom that that it can break below that, but it certainly can. Remember, we're in that talks of Brexit all the time, just like we're talking about stuff over here. They have Brexit to talk about. So the difference is they don't set off bombs. Anyway, let's take a quick look here at one of the, someone's asked a question about one of the FANG stocks, and we'll get it up here to take a look at it. This is Google. If you'll notice here in Google, we did hit a really major 78% level retracement on Friday. We had a really strong rally backed off a little bit, but as long as we can stay above 1,030, that's pretty good. But the ABCD pattern on this takes you down to the 995. So we're in a bottoming zone in a lot of these FANG stocks. That's why it's you have to pay close attention in here, because first two things. One, if they haven't scared anybody in this market. If you're long, you probably got scared, and if you're short, you probably got scared. But there's nothing really big happening that. Okay, Bob's asked a question about the natural gas, and I'll bring that up very, very shortly here. Bob, if you'll give me a second, I have to find the futures. We get back, I'll cover natural gas before we finish the show, Bob. I promise that. So we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're talking about the natural gas contract with our friend Bob up in Spokane, Washington. And Bob, we've just made a 382 retracement there at 310. I don't think you have to risk more than about 3 points in that, so it looks like it's got a chance. It's an ABCD structure. We're trading at 310.08 now, so you don't have to risk very much at all at this level. We did take out the lows of last Friday, which is good by just a little bit, but we're still right at that 382 retracement. Regarding the energies, you know, you hear a lot of talk on the news about $100 a barrel oil, folks. Let me explain something to you. When we had that $72 a barrel crude oil a couple of weeks ago that was right at the 61% retracement with the 3 drive to a top pattern at $72 a barrel in crude oil. In order for it to get to $100 a barrel, it's got to get through 72. So you can forget $100 a barrel oil. You know, I don't see that coming. But if we do get above 72, then you've got a chance at something like that. But, you know, we're trading at $67 a barrel right now, 67.15. So that's not actually a very good sign. So it certainly doesn't look like it wants to go to $100, you know, when it's trading at 67. So this is news that people bring out and talk about it because they're trying to, you know, up their, you know, they're long the oil, so they want to get as much bullish news as they can. And no one is better at that than Goldman Sachs. They write special reports. They have the ear of the world, and yet the stuff that they put out is not always in the best interest of you know, those reading those reports, because they have a tendency to trade against them, as they should. That's part of their business. Warren Buffett is another one. Be careful what Warren Buffett says, because, you know, he worries about, you know, Warren more than he worries about anybody else, and he knows how to play, how to use the markets. I kept a file of all the stuff that he had said over the years of when he was buying his stock, and another one. He had one called Triple L back in the days of the dot-com bubble. That was... Live every day in an attitude of gratitude, and may God...
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!